Hey friends, it's Ryan Brown, and today we have a big bout between FHA versus conventional. Who's gonna win? What is the difference between the two? Let's go. So today it's FHA versus conventional. We want to break down the difference between the two. So what is the big deal between FHA and conventional? I know a lot of you realtors out there are like, oh, FHA, it's terrible, it's a terrible loan.
No, God, please, no, no, no!
Well, it's not necessarily the case, but let's break down the reasons why you might want to go with a conventional versus FHA. And there's so many reasons why. Number one, credit score. Conventional loans, minimum credit score, 620. FHA, we can do 580 or even less. So if you have less than a 580 score and you could do 10% down, we can still do that deal at 3.5% down payments. Pretty amazing thing. So FHA is a lot more lenient on credit scores versus conventional. Conventional is a hard line at 620. Debt to income ratio. Conventional typically wants to keep you at a 45 back-end ratio. That means that all of your debt, including your new mortgage that you're getting, is going to be at 45% of your gross monthly income. Now, highly qualified clients can go up to 49, but in general speaking terms, it's 45. FHA, they'll take you up to 56.9% of your gross monthly income. Think about that. That's pretty lenient. So debt to income ratios are much higher. You have mortgage insurance. So on a conventional loan, mortgage insurance is a lot lower than FHA, generally speaking. So if you're less than a 680 credit score, the mortgage insurance on conventional could be higher, but the conventional loan mortgage insurance is cancelable after 2 years and when you have 25% equity. Yes, 25% equity. Watch our other video on that because I'm going to break down how you get rid of your mortgage insurance on a conventional loan. FHA's hidden little secret is that they have two mortgage insurance.
Naughty, naughty.
They have a monthly mortgage insurance that is 0.85% times your loan amount. And they also have this thing called UFMIP, upfront mortgage insurance. So let's just say all else is being equal. Let's just say conventional mortgage insurance, let's just say it's 0.85 based on the scenario, and FHA is 0.85. But FHA has an upfront mortgage insurance premium, which is 1.75% of your loan amount. So for every $100,000, $1,750 for every $100,000 is getting rolled into your loan. So you don't have to pay it out of pocket, but it's getting tacked onto your loan that you would have on your payoff. You'd have to pay it off. Also, your payments would be based on that higher amount. So conventional is always the best option because it's a much cheaper option if you look at all the costs. So mortgage insurance, conventional is the best. Loan limits, it's another consideration. So loan limit now for conventional lending is the max is $647,200. The loan limit in Palm Beach County for FHA is $460,000. So obviously, if you're looking at a higher priced home, we might want to keep you in a conventional loan. Also, property type. On a conventional loan, you can do a primary residence, second home, or an investment property. FHA, primary residence only. They do not allow any second homes or investment properties. Conventional lending, as far as the underwriting goes, we have to run it through a system called Desktop Originator or Underwriter or LP. It's the two government systems that we have to run your data through to see if we get an approval. So we take all the information that's validated, we run it through the system, and the system's going to tell us if it's approved or not. Well, if it's not approved and we can't get an approval on it, we can't do a deal. So that means we can't do a conventional loan. If we keep getting a refer and it's just saying, listen, we're not approving it, it's not going to happen with conventional. With FHA, if we can't get the approval, we can also do what's called a manual underwrite. That's like the old school, makes sense underwrite. The underwriter is going to do a manual calculation of income. They're going to review all the documents, all the letters of explanation, and make sense of it. So a lot of times if you have a client that maybe had some bumps and bruises on credit, that's explainable, it's best to go with a manual underwrite. Down payment options, conventional. If you are a first-time home buyer and haven't owned a home in the last 3 years, you can do 3%, but the standard's 5% kind of on conventional. Also, if you want to buy multiple units, either duplex, triplex, or quad as a primary residence, a duplex on conventional loan, you have to do 15% down. If you're buying a tri or a quad, you have to do 25% down on a primary residence. FHA, the best deal in town, 3.5% down. You want to buy a duplex, tri, or quad, 3.5% down. Think about it. If you are in a position that you could live in one unit and rent 3 other units, do it.
Just do it!
Buy something on FHA. Do 3.5% down, rent out 3 units, live in one. Maybe you live in it for a couple years, convert the 4th unit to a rental, and buy something else. That's how you build wealth. Utilize the FHA. Also, the loan limits on FHA, when you get into a duplex, tri, or quad, you can actually go much higher than $460,000. Email me or give me a call. I can get you the exact numbers on that. Interest rates, in general speaking terms, they're about the same. But the interest rates on conventional are much more based on your credit score and different adjustments in the file. So to break that down more, like if you had a 620 credit score, on a conventional, your rate's going to be way, way higher than an FHA. FHA really doesn't penalize you too much for credit score when it comes to interest rate. But in general speaking terms, like if you're at a 700 score, your rate on FHA and conventional is going to be very, very similar. It's just conventional is more sensitive with lower credit scores. That rate's going to go up quite a bit. Also condos. If you're buying condo as an asset class, that's another consideration, as it is a little bit easier to get a condo approved on a conventional loan versus an FHA. FHA does have a lot more stipulations to get the condo approved than a conventional loan. Those are the main reasons why you do conventional versus FHA. I don't know who got the knockout today. They're both great products, but you have to have a great mortgage advisor advise you as to which one is the best. A lot of people, mortgage people, which is not good, they try to push people into the FHA because it's a little bit easier. Maybe they make a little more commission on it. It's not the right thing to do. If you have a good credit score, you always go with a conventional loan, always. I hope this helps. If you found value in this, please give me a comment below. I'd love to interact with you. If you know anybody that this might help, please forward it and share it to them. Thank you so much. Have a great day. Bye-bye.